disclosure page for our compliance people. And today I wanted to talk about the risks and resilience of this complex world. And it's funny, when we had the session yesterday in our office, Anthony Gordon actually brought up how complex the world is and how negative he is about how he thinks investors should be more negative on what's going on and less positive. And I'd sent this presentation to Mark on Sunday night. So at least I don't see him on, but it was a topic that was relevant to Anthony. So I figured we might be on.
He'll be on later for the 11:30 at least.
We might be on the right track. But before I get into the risks, I just want to touch on one subject because politics in the U.S. has been sloppy and messy, and I'm trying to be very balanced about it. But Congress finally approving funds for Ukraine and Israel while targeting TikTok is a big event. And I hope it's one not too late for Ukraine, because this could have been done months ago. It was politics for the wrong reason. But I would say, and I'm not very complimentary of Congress, but Mike Johnson did something that we haven't seen many politicians do lately, is put his job on the line to do the right thing in an election year. So I'm really negative on politicians overall. I will give him credit for doing something that, one, I didn't think he would do, and two, took a lot of guts to do. So it's nice to see politicians doing the right thing for a change. But right now, with all that's going on in the world, politicians, policymakers, business leaders, consumers, and investors are all trying to figure out where do we go from here. So I want to share what the upside risks and downside risks are for the world we live in today. And it gets to some of the resilience that's going on out there. And we just start with the IMF numbers. They put out their twice-a-year report. They do it April and October, looking at relatively good growth for all the problems that we have this year and next at 3.2%. The advanced economies growth is not great. That's really around stall speed for a lot of the economies at 1.7, 1.6%. But there's, in the emerging economies and developing economies, and even in the advanced economies, there are big dispersion between the fortunes of different countries. And I think those economic realities are going to be quite painful for a lot of people. I think one of the areas that the most pain's coming from all the crazy dynamics in the world is going to be in the low-income developing nations who are getting hit in a lot of different ways. And we'll touch on that in a minute. But start with the downside risk, and there are six of them that I list here. I'll show you, I'll get into a couple of these in more details, but because I think they're really kind of highlighting what's going on. But I'll start with the geopolitical risk and its impact on commodity prices. And this is a chart going back. The blue is geopolitical risk. The red is crude prices going back to 88. And you can see starting with the Gulf Wars and then through 9/11, through 2001, and subsequent issues on the geopolitical side, oil really didn't take off until 2008 in terms of the big move up. And we know what the damage that did at that time. It got up to about 120, I believe, maybe 129 was the peak. And then it's been came back down, kind of floating around. But right now we're seeing a bit of a trend up, although oil's backed off. It hit 90 originally with the Iranian attack on Israel, and then has come back down about $5. But we're going into a season where you could have some real issues here, and a lot of nations need higher oil prices for their budgets. I think I saw the Saudis need around $90 a barrel to hit their budget obligations to make their transition. So I think we're in a period where oil prices are going to be one of the big issues and could move the other way. But right now, with what's going on, I'm actually pleasantly surprised that we haven't seen a dramatic spike in commodity prices, which is caking some of the inflationary pressures and problems out of the system for the near term. But we are seeing trends up in inflation, so we got to be careful there. I think while inflation's come down, getting to the last mile has been hard. And the chart on the right shows you where the IMF was looking back in October for headline and core, and where they are looking now. And while we've had a big move down, we're at that point where how do you get to the 2% level, and that's proving tougher than people would like. I think the central banks are doing a pretty good job of managing it. I think a lot of the inflation problem came from the fiscal spending that was being done at the very late stages of an economic expansion that was probably the right thing to do at the wrong time. So I don't want to criticize what was done, but I would say if it was done 10 years earlier at zero interest rates, rather than starting it going into 5% interest rates, would have been a lot more helpful to the US and other areas. So the debt loads and the inflation projections of where we go from here, given the global dynamics, I think are one of the things you have to watch for. I don't think we're going to see a big move up in interest rates or a big move down in interest rates or inflation in the near term because of what's going on. But I think the central banks, for reasons we'll talk about in a minute, have to be a little more careful where they go right now. And the market's not going to like that in the near term, which is fine. We've had a massive move in the markets in the US, so consolidation of pullback is not unusual. I think China and the US and Europe are the three big things that drive everything right now. And China's economy is struggling. We know the challenges, they're well publicized. I'm more favorable on where they're going rather than where they've been. But you can see from this chart, their industrial production has been high and above trend, above pre-pandemic trend, and the retail sales are down. And I think that speaks to some of the dynamics and challenges that China's facing. Are they oversupplying the world with their production, which is going to create some big trade issues? We're already hearing that from the US and Europe, and yet they're struggling with retail sales. So how do they get their consumer economy going to get the better balance that they need? I think that's one of the big issues. I think people are too negative on China right now. UBS just came out with a positive outlook on China stocks. So I think there's a change going, but clearly, how they play their economy is going to be an important element. And then add to it that President Xi just reorganized the military a little bit, getting some leaders pushed out to try and get them more ready for external challenges, which they're going to have to plan for plenty. But I also think it's really designed to strengthen President Xi's position in the country. So I'm not sure when you make those kind of changes that support the autocrat that it actually helps you for military readiness. So it could actually hurt because it leads to a lot of distrust and then you're blindly following loyalty. So it's going to be interesting to see how that plays out and does it help their military readiness or not. So interesting dynamics in China. One of the other issues was confidence in governments to be able to deliver on all their promises. And what you see here is the blue is their people who have a great deal or quite a lot of confidence in governments, and 45% or below is not great. If you think every time you have an election, half the country is against the policies, it's hard to move the needle. But when you get into Parliament, Congress, or Parliament and the political parties themselves, it's even worse. So this gets to the trust issue, and do people have confidence that the government's going to do the right thing? Clearly a big risk. So problems are out there. I leave wars out of it escalating, because if they go, really all bets are off. And I think we have some issues we're going to have to face there. So I don't think Anthony's completely wrong about the need to rethink things, but there are a lot of positives, and some of them are near term. Here, I list them here, but I want to get into it. We've talked about the 50 nations having elections, about half the world's population, but incumbents do a lot of things in an election year to reinforce the votes. So you're seeing it around the world. They might tweak some of the subsidies, make them higher to ease some of the pressure short term. You might waive student debt to the tune of billions of dollars to help secure some votes. You might do other things to help Social Security recipients or people on social programs to curry the votes. All those are positive for short-term growth. They're not things that deal with the structural issues, but we're in an election year, and you see the numbers in election years tend to be generally positive because of some of the short-term stimulus that goes on. I think the big issue for the world is how AI unleashes, and does it unleash the massive productivity that's needed to offset some of the demographic and other growth issues that we're seeing, and allow companies to do more with less and get the returns that they need to move the needle and improve GDP and productivity. We've had negative productivity since the pandemic started, and are starting to see more positive numbers here. But we are also seeing the earnings coming out right now, and you'll see a lot of fits and starts on the AI in the public markets, and the expectations might have gotten a little ahead of themselves, which happens when we do these cycles. But this is coming, it's coming fast. It's how do we harness it and how do we control it, and do we get the productivity increase? I think it's coming. I think another positive in a negative, it's kind of a backhanded positive, is we had less economic scarring from the pandemic and the wars that occurred in most of the world. But as I mentioned earlier, the people who get hurt most when you have this kind of global stress tends to be the low-income developing nations. And you think what they're getting hit with right now include a very strong US dollar, which takes their debts, which are in dollars, and makes them more costly to service. It also makes their purchase of commodities more costly. You have that problem going on. You have the climate change issue, which they get hurt the most by because they don't really have the funds to do the change, but they're also in areas that tend to feel the worst weather patterns. So a lot of challenges in that area. So as we talk about resources moving to those Africa and other areas, I think these are issues we have to really keep in mind, is the headwinds that are structural are real, and they're going to be with us for a while. And they have cyclical headwinds as well. So it's kind of the worst of both worlds. But I think the way we're looking at the world at ARS is everything changed again back when the proxy wars converted to direct attacks by Iran and Israel. And where do we go from here with that is a big determinant. But it's part of the reason the central banks don't have the confidence to aggressively cut rates like people would like. But I think the other part is the economy, global economy, is doing much better than people thought. And the US economy is quite strong when you have full employment. You have GDP that's probably going to come in around, I think the GDP now number's around 2.9% for the 1 year number, which is pretty healthy given all the problems we have. So I don't think Powell is going to be aggressive to move rates up, but I also don't think he's going to be aggressive to move rates down. And I think he's been consistent. I think the market has been inconsistent. But right now, what he's worried about is 3 prints in a row of higher CPI numbers. And while the PPI number was better last month, these are not 1 or 2 months as a moves to a line. 3 starts becoming a trend, and he's worried about that. And in fairness, I think the issue for the central banks is they don't know where the neutral rate is because of how messy the world is right now and how many near-term dynamics could topple things around. And to raise rates right now sends a very big message to the world. And it puts a lot of strain on the rest of the world. It strengthens the dollar at a time they don't need that to happen and creates greater divergences. So I think this is one of the challenges that central banks are facing. And you think about the ECB is probably going to cut ahead of the Fed, and that's going to strengthen the dollar even more and put some more strains on the system. So something to keep an eye on with where we are. We think I think I said a couple of weeks ago that we were in the 2 to 3 cut camp this year. It is actually moving for a lot of the market to no cuts and a raise potentially. So we're not in that camp yet, but a no cut environment is quite possible. And this is really messing with the market. So what you can see from this chart is the swings in the narrative on what the implied Fed funds futures were in the different periods since June of last year to this year. And the swings up and down are quite dramatic. And now we've moved up to the April in the light blue at much higher levels. I think the financial markets have been pretty wrong. So I wouldn't count on what they're doing, but it is a good indicator to just see what their sense is and maybe how disappointed they're going to be over time. But everyone has an opinion, including Fed officials. And fortunately, we've moved into a blackout period where they can't comment till May 1st, I believe, right after their next meeting. But you can see the comments are all over the board. Sometimes that's planned by the central bank. Sometimes it's central bank presidents talking what they're seeing in their region, and sometimes just talking about what their personal views are. But that is what the dot plots are. It's what each of the voters or each of the members to the participants in the survey believe and see from their own region and how they see the world. So we're all over the place. I think you'll get a better sense on May 1st where we're going. I think people are overreacting to some of the short-term issues. And I do think the some of the things going on between Iran and Israel are aggressive, but they're holding back a little bit. I do think the 300 drones and missiles fired into Israel were not intended to not inflict serious damage. Just like I think the message sent back by Israel to the nuclear facility was a strong message as well, but it was one that starts to ease some of the tensions a little bit. We have to see where we go from here. But this is really going to play out, and I think the policymakers are going to wait to see what happens. I think the EU is in a funny spot right now and figuring out where they go. And while they're ahead of the US on the energy transition, they're lagging in a lot of other areas, particularly I think the energy transition has hurt some of their businesses. And I go back to the survey that I shared last summer with the European Business Roundtable, where CEOs were, I think 80% of them were suggesting that their foreign direct next investments were going to be outside of Europe into the US or into other jurisdictions. That's not good for the growth of Europe right now. But they are being very aggressive in setting policy, and it is impacting US companies and China as well. So they're trying to punch above their weight with policy, but they got to get their economy to back it up. And I think there's some challenges there. There are pockets of really great opportunity. As Goldman's highlighted, the granolas stocks, the 8 or 10 stocks, they're doing really well in Europe. Many of them are healthcare stocks, LHNV and a few others. But I think there's some positives there, but they have their struggles ahead. And I worry that the geopolitics and the domestic politics are going to really hold them back. Immigration is a big issue. And I'll come back to that because I have some numbers from the US, and this is actually part of the reason the US is doing so well. So for perspective, net immigration into the US averaged for a long time about 900,000 people. In 2022, we had 2.6 million legal and illegal immigrants coming in. And in 23, we had 3.3 million. And as I mentioned earlier, the mayor of Kansas City is begging cities to send people so they can have enough labor to do what they need to do in that city. So the debate's all wrong. As we've talked about immigration a lot here, the debate's all wrong. We got to fix it so that you get immigration done. You get the people you need in with quota systems and the right levels. You allow asylum seekers to come. But I get a kick out of all the people, particularly in election years, who say, if so-and-so wins, I'm going to leave, move to another country. When people are literally dying to come to the US, they're putting their lives at risk, separating from their families. And we're arguing about the wrong things all the time here. So enough on that. It's a hot topic, and that's as political as I'll get. Both parties screwed it up. But where are the positives and how we see in the world today? I think the consolidation in the markets was due. You don't have the run like we've had since December, and even prior to that, without needing to take a breather. I think the market needed to get to the period where they had a consolidation period. If things stay the way they are right now and geopolitical tensions don't advance, which is a big risk, and I think Anthony's right to raise that concern, then I think the big issues go back to the three we've talked about all the time: living costs rising, the global fragmentation as it relates to trade and its impact on business, and the reindustrialization of the global economy, which is right now favoring a handful of countries and hurting a number of them. I also think the three new forces that are driving capital flows, which we talk about all the time, generative AI and the GLP medications and climate transformation, are really the big issues. And all three of them will have fits and starts. And we had this one period where generative AI for about 12 months had only one way to go. And now we're starting to deal with the realities. And we've seen this over and over again and when new technologies come out. So this should not be a surprise. A lot of money will be made and lost by just picking the right winners again. But I think it is impacting capital flows, these three areas. And The fits and starts will get it down to who the real winners and losers here are. And I think the winners and losers are going to come down to the companies that have the cash flows and the balance sheets to continue to make the investments while still maintaining reasonable enough growth to keep making the investments they need to make. And that is not a big number, which is why you're seeing the big divergences that exist in the markets today between companies. But I go back to the three great divergences I've talked about for a while, Mark. You have country inequality, you have company inequality, and you have income inequality. We focus on the income one. We're starting to focus more on the country one, but the market tells you every day the company one, and I think that's growing. And if you're highly indebted with low growth and you can't maintain your earnings, and a lot of people won't because it was inflationary driven, and inflation is changing in different areas of the economy pretty quickly. Some people are going to be left holding massive inventories that they can't get rid of, which will bring down costs for them and play on their earnings going forward. And you can't rely on multiple expansion if you think rates might go up. So that really puts the emphasis on who has pricing power and who has the reasonable growth. And I would also say for ARS, be careful about the hyper growth numbers in the public markets because most people will not be able to deliver on them given the global dynamics. We were due for a pullback. Whether it goes to the correction level or not remains to be seen. Shouldn't be a surprise if we get there, but I don't think the big one that everyone's worried about is coming unless we go into a much bigger global conflict. However, we will see volatility. We had the VIX go from 13 to 18, now back down to 16 in a very short period of time. So volatility will be with us, but the technicals would say that we're still on track for 5,400 to this year, 6,000 next year on the S&P.
What's your Denny?
Your Denny is right around there too. Near-term sloppiness is on people's minds. Nancy's lower. She would be on the negative side. I don't have her exact number, but I think they were in the 4,800 range, which I think for people following the technicals, around 4,600 is the 200-day moving average. Might be 48, I'm not sure. But it wouldn't be inconceivable to hit the 200-day from where we are and move back. But a lot will depend on where the central banks go, and a lot will depend on the ability to keep the conflicts from expanding. And I would say that maybe the slow but finally coming support for Ukraine may use some of those pressures, but we have to see, is it too late or not? So I'll stop there, Mark.
You know, you set a record there.
Like,
Yeah.
I thought the record was 42. But
No, but just you have a lot of content. So as a result, we will move our 11:30 to 11:45.
sorry about that.
No, that was all good. So I got lots of questions, but I'll let everyone go first. Questions, comments? Leslie wants to say something. Yeah.
I have a question on China. What is your prognosis? How do you expect Chinese growth to behave going into 2025?
I think if I had to guess, and it would be a guess, we don't invest in China. I study it because of their impact on the global economy. I think they've taken a lot of the hits, and I think they're doing things to stabilize the economy. And if they get stabilization, then I think they can start to see some capital return flowing back in. But I think it really is going to come down to whether President Xi can have a charm offensive enough to say it's okay to invest and we're not going to screw you, which I think is a hard thing for a lot of foreigners to get their mind around right now. I would also say that there are pockets of opportunity that the government tells you can invest in there, where they're supporting their economy. They very clearly identify their strategically vital industries, and I think they're going to support them, and I think they'll the systems support others. The one thing I do worry about with China is the fallout of TikTok and that being thrown into the support for Ukraine. And does that lead to a tit for tat where our biggest companies get impacted, like Apple and some of the other players? So I think that's one of the things that's more concerned about more recently. But I think generally I think a lot of their problems have been either addressed or acknowledged. And acknowledging them in China is half the battle. I also think they've done some things that do help their system. They are putting some steps into support Social Security a little bit better and other areas. So I wouldn't say it's free and clear, but I do think they're probably in the bottoming phase and getting ready to come out. And I would be looking more favorably on them than I think the market is today.
Zarin?
Hi. You rightly mentioned the economic difficulties for the emerging markets, also the rise of the energy prices, the depreciation of the local monetary, etc. How much do you think this will play a role on the geopolitical relations and negotiations, the economic difficulties, and the whole world politics?
It's fascinating. I think that when you step back and look at the energy markets, you have to look at it in two dynamics right now, two dimensions. One is what the impact is on global supply and demand, given the challenges of the clean energy transition and the like. And two is what is the impact on countries' budgets who rely on energy revenues to help them make their transitions, like the Saudis, or help them fund wars like Russia. So I think the geopolitics of that are real, and I think it's going to force the global South to start to either band together to create a group that forces the West and the autocratic nations to treat them as one entity so that they have buying power, that their bloc gives them, where they're not have to be beholden to one or the other. Because I think if they do that, they lose. Because when you go back in time, we've screwed everyone. Both, you look at, U.S. and Russia and Afghanistan both failed there to try and help. You look at Venezuela and what we did with oil and what people going in and trying to help. We don't do a great job. We don't leave these places generally better than we went in. So I'm not sure our help is actually help from any of the nations when we go into those areas the way we've done it in the past. So I think we need a new model for that, is really the way I would think about it. And I think the global South has to decide, do they want to be beholden to one nation, or do they want to create the ability to stand on their own and get the best of both worlds? And I don't know that they can do that with their politics. So I think they're going to end up beholden to one, which splits the world more and leads to more fragmentation.
Thank you.
Other questions?
I'll do better next week.
No, it's all good. Any other questions for? You laid out pretty detailed. Have you answered all the questions?
I have more questions and answers. Yes.
I have one more question, Dieter.
Please,
I would like to get your opinion. I don't know if you followed it. The German president or Chancellor Scholz was in China for 3 days, the longest visit ever. I don't know if you followed it. He was accompanied by 10 CEOs of the largest German companies, all the car guys and everything. And there was a lot of jokes on the German television, which of course I understand. And they tried to sign joint ventures, contract, talk about manufacturing, and the result was they signed 2 contracts exporting German beef, which we all know it's not existing. Germans is importing beef from Argentina, and apples.
What?
I mean, apples. Signed a contract for exporting German apples and beef to China. That was all. Apples.
Yeah, okay.
The fruits. I mean, what a joke.
Well, you answered it
What is your opinion?
You answered it for what you think about the politics of it. From the economics of it, I think European countries are in a similar boat to what I just described with the global South of how do you play both sides against the middle and win? They want and need the Chinese market and they want and need the US market. How do you play in both? And I think they're going to have to try and find a way to navigate that. And it's a tough spot. I think he's in a bad way. I don't think Germany right now has the power to influence the way they would like to in that area. So I think they have to try and do the best they can, but I think they'll be a taker rather than a giver of what the terms are on everything right now between the two countries, unfortunately.
Yeah, and if Germany representing more or less Europe at this meeting also, I mean, that's a sign where China is looking at the moment. Definitely not big relationships with Europe and the Chinese. That's my opinion.
It gets confusing too for the population and for investors to understand where the focus is and what they're emphasizing and what they're doing when it fits and starts with politics. And I think he struggled to find his voice, is what I would say for Scholz.
Thank you.
And it's tough. It's also tough following Merkel, who was really viewed as while she was in office, as one of the most, had the most favorable approval ratings of any leader around the world. Not at the end, but for most of her term.
Rob is up next. Hi, Rob. Been a while.
Hey, Mark, thanks.
Uh-oh. Coming in like a robot.
Steve, good again. A good thing. Combine the Ukraine aid on Capitol Hill. Yeah. It's just with respect to the Ukraine aid, Steve, are you surprised that has become such a political hot potato?
I'm not surprised, but I'm appalled. I put it that way. I can't believe that anyone in the West would not see what's ahead of us with what's going on right now with Russia's ambitions. And if you don't stop it now, when are you going to stop it? So I'm appalled it took so long to do something that politicized for the wrong reasons. So.